On today's episode of Secrets to Scaling Your E-commerce Brand, I got a chance to chat with Cyndi Thomason from Bookskeep. We had such a good conversation. If you guys listened to the episode a little while ago with a certain CPA, we were flagging Profit First, and I had to have Cyndi on to come and defend Profit First and let us know exactly where it fits in and why it fits in nicely into this whole landscape of accounting and bookkeeping and why it could potentially save your business. You guys are not going to want to miss this one. Hey guys, Jordan West back with another episode of Secrets to Scaling Your E-commerce Brand. I'm really excited about this conversation. If you guys have been listening to the podcast at all in the recent weeks and months, you'll know that I love to find different sides to the same coin and try and figure out, what is working, what works for one size business may not work for another size. I slammed Profit First as you continue to grow recently. And lo and behold, what are we going to talk about today? We're going to talk about Profit First. I'm really looking forward to diving into this conversation. Cyndi, wonderful to have you on. Cyndi Thomason from Bookskeep. Welcome to Secrets to Scaling Your E-commerce Brand.
Thank you, Jordan. I'm excited to dig into Profit First and convert you today.
Absolutely. And you actually wrote the book on this, didn't you?
Well, Mike Michalowicz wrote the original Profit First, and it actually was self-published originally, and then he got picked up by Penguin House. And he wrote, at that point I was practicing Profit First, and he's like, reached out to all of us and said, hey, what can I do different in the new one? And I'm like, you got to include inventory. It's just so important. And he didn't. And so then I kind of slammed him and said, okay, inventory is hugely important. Why did you leave it out? And he said, well, Penguin House thought it was too specific. He said, you should write that book. I'm like, okay. I will. And so that's how I got the derivative license from him. I wrote the first derivative book, which is Profit First for e-commerce sellers.
That's awesome because so for those of you who haven't, been around for the last 500 episodes on this podcast, I think it was like episode 30 or something. I had Mike Michalowicz on, talked to him all about Profit First for e-com businesses. And this is the one thing that he did not have great answers for inventory. There just wasn't great answers that fit into Profit First. And so it just didn't seem like a system that we could use, especially as we're kind of scaling into the mid 7 figures and beyond. It just didn't seem like a system that we could use at that time or that I could figure out with all of the inventory issues that we continually run into and the massive inventory outputs that we have. It's like one day you have a couple $100,000 in your bank and the next day you have negative 100, because of inventory. So Cyndi, walk me through first, for people who don't know Profit First, I talk about it like everybody knows it. Unless you've read the book and unless you practice it, you don't know what Profit First is. That's totally okay. Walk me through why Profit First.
Well, Profit First is actually a cash flow management methodology. And it kind of is like what you may have experienced with your grandmother with like the envelope systems where you put aside money that you get into a certain bank account for a specific purpose. And really what Mike is trying to achieve is to make sure that we pay ourselves, that we get a profit, that we take care of the obligation we have to the government. And what's left is what's left to run the business on. And the mistake a lot of people make is they've got this one bank account where everything is all accumulating into that bank account. And it gives them this false impression that maybe there's a lot of money there, or maybe there's not. And we've got some problems. But really, if you are able to segregate your money for a specific purpose, then you're really more in touch with what you've got money to spend for each purpose. And so that's what I like about it, because it really all comes back down to this principle of Parkinson's law, which is you use what you got. It was developed in the 1950s by a British naval officer, Cyril Northcote Parkinson. And what he said was, more and more money was coming into the British Navy, but they were just more and more money was going out. And he tried to understand that. And what he developed was this law that's Parkinson's law now, that says if you have resources available, you will rise to the occasion and spend those resources. And Profit First just uses that behavior that's kind of wired in all of us to say, okay, if we're going to do that, let's at least be clear that we want to use a certain amount for paying ourselves and a certain amount for paying the taxes so that we don't get stuck at the end of the year wondering why we even worked because we didn't take anything to benefit ourselves.
Which is so common, right? It's so ridiculously common. This is why Profit First is so beautiful for businesses as they start to grow, because you need to be served as the owner, right? Like you need to take you number one need to take an owner's draw, right? Like
Mm,
that's a non-negotiable. You
right.
cannot be working in your business and not take an owner's draw. Otherwise, what are you working for? And you will not want to serve your business, right? If the business isn't serving you, you're not going to want to do nearly as much for your business if
Right.
you
And
are
what's your
not getting
family going to
paid.
say? You're not bringing anything home and they're suffering along with you, but they don't even have you around to suffer with because you're working all the time. So it really does set you up to create the business that's going to serve whatever your goals are. Typically, family is what a lot of our clients are. They've got family things that they want to
Totally.
do and support.
Yeah, yeah, absolutely. So let's talk about that. So profit first for e-commerce businesses. What are the different buckets that we're looking at and the different accounts that we're going to set up when it comes to profit first for e-com?
Well, Mike's approach is you set up all of these buckets to start with and you dive right in. And I equate that to diving off a cliff into the deep water. I like to take my clients through walking kind of slowly in from the beach and get used to what's going on. And the first two accounts that I want them to have, in addition to a traditional, bank account that where everything else is happening, I want them to have a inventory account and I want them to have a profit account. And the main thing that I'm trying to get across to them is that your cash flow for inventory is this real spiky up and down thing. You're growing that bank account as you sell through the inventory you've bought. And then one day you got to buy more and then that bank account plummets. If you've got all of that mixed in with what's a pretty normal shaped curve for OPEX, then you're just creating all these swings whenever OPEX really should be kind of flat. I mean, you pay your rent,
Yeah.
you pay your people, it should be, you should be able to count on month by month what you're going to need. And so just by separating that out, you can start to understand the impact of inventory cash flow and how that's different from operating expense cash flow. And then the profit account
Gotcha.
just wants you to get in the habit of putting something aside for profit, because if you haven't been taking anything, you need to be starting to build up that muscle and recognize that the importance of it. And it's also starting to build a rainy day fund, because that's the other place people are not setting themselves up for what might
Yeah.
happen that we can't even predict.
Totally, totally. And I think that we're seeing this right now with a lot of businesses in 2023, right? There's a lot of businesses who did not have rainy day funds, who did not have extra cash, who, were probably deep into lines of credit and they're getting pulled back and all of that kind of stuff that, understandably, right? Like stuff like this happens and we're going through another cycle right now. But
Mhm.
having that little cushion is sure nice, and knowing that you've paid all your bills, you're still paying yourself, and you have this rainy day cushion because like, a lot of businesses in e-com this year are down massive amounts. I mean, I've seen the majority of businesses that I've been looking at are down between 30 and 40%, right? Nobody's talking about it. I don't know why. It's
I don't know why
weird.
either,
I,
but it is happening. You're exactly
I'm sure
right.
you're seeing it too, right, Cindy? Like, I'm
Right.
not crazy looking at
No,
these
you're not
businesses.
crazy. It's happening. And, today's Prime Day. So maybe this is the day that's going to boost everybody back up. But it is happening. And we are seeing clients really struggle with
Yeah.
a couple of things have happened. We had this artificial boom with COVID where people could sell everything online. And then they got all this cash infusion from government loans and PPP programs, et cetera. And they've burned through that now. And now the sales are slowing down, and that cash, they built their business with this expectation of having this certain level of cash that's artificial, that's not really there
Yeah.
anymore. So it is a crunch. It hurts.
Totally, totally. And I think that tons of people are going through it right now.
Mm.
Let's talk about, what people can do during times like this right now from a cash flow perspective. How do companies survive as, things start getting pulled back, all this government money starts getting pulled back? How do these companies stay afloat?
Well, a couple of things. One is, if you do have this reserve that you've built up, your rainy day fund, the thing that buys you, it may not buy you a lot in terms of money, but it buys you time to make better decisions. Because if you're
Yeah.
feeling the crunch of having to decide something right away, that's painful. And you're not at your best making your best decisions.
Yeah.
The other thing is, there's a technique, a tool called 13-week cash flow planning. And typically it's what has been done for businesses that are in distress. And I don't think necessarily that all of our businesses who are experiencing this downturn are in distress, but I think they're headed that way if they don't get on top of it. And so what we do with our clients is we do the forecasting of when do you think this money's going to come in week by week? When is the forecast for this inventory going out week by week? Then what money do you have to actually spend on OpEx, and how can we cut that, reduce it, replace it? And then what do you have to keep? OpEx it's the evil of our businesses. It really, people don't realize how much money they are spending. And as a result, they're so busy fighting other fires that they don't pay attention to these subscriptions for things that they've tried that they decided they didn't really
Yeah.
need, but they never got around to canceling it. We typically can cut $1,800 a month out of people's OpEx. So
Wow.
pay attention to that. If you haven't done it, print out your OpEx for the last 3 months, sort it by vendor, and figure out, are you using it? Are you
Yeah.
using it enough is it bringing that return to your business? If not, cut it or find a
Yeah. This is
replacement.
the time to do it. This is
Yeah,
the time.
exactly.
Another, I just want to actually hop on that point too,
Mhm.
Cindy. So one of the other things that I've seen is, before, so if it is software that you think is actually producing money and is doing well for you, before cutting it, what I would recommend is call them and negotiate with them. Just let them know, hey, look, I can't afford the software right now. I'm either going to leave, or can you give me any kind of deal? These software companies, remember, it doesn't cost them a penny to keep you. Like, nothing, right? Unless they're running like LLMs and, they're paying for storage and stuff. Like, really, you're pure profit to them at that point, especially if you've been paying for a while. So please try to renegotiate with them. They will. They'll all renegotiate with you 100%. So that's definitely, and then you're set up wonderfully for when the economy comes back.
Right. And if you can't negotiate with the software person, then maybe there's a, a tier that you could move back to where you don't get everything, but at least it gives you something that you need. Or there's another software out there that'll do 90% of what you need that's much cheaper. So look around
Yeah.
for some options if it's going to impact your ability to run your business.
Let's talk some general numbers in e-commerce. So, as far as OpEx is concerned, right? Operating expenses, just so everyone knows, that's when we're talking about OpEx. OpEx versus inventory. Where do those buckets normally fall where you see healthy businesses with a certain level of OpEx in e-com?
Well, honestly, e-com OpEx is no different than OpEx for any other business. Once you get below what we call the real revenue, in Profit First, we have top line revenue. So that's the dollars that come in your bank account. Then you've got the inventory dollars that go out to buy your next round of inventory. And then you've got what's left is your real revenue. And the beauty of Profit First is that Mike evaluated thousands of businesses and he figured out what these percentages ought to be from real revenue. So from the real revenue bucket down, depending on the size of your business, you're looking at your audience is what, 5 to 10 million or 10 to 50
Yeah,
million?
somewhere. Yeah, I would say most of the people listening to this are sort of in the 5 to 50 million range.
Okay. So at that point, OpEx should be about 65% of your operation, your real revenue number. So it's a fairly big number, but it's assuming that at that point, you're not working in the business as much. You're taking mostly profit and a little bit of owner draw because at that,
So now, remember, guys, this is OpEx after inventory.
right,
Right?
right,
After you paid for your inventory. So whatever that is, if your gross margin is 60%, you're taking 40% right off the top
right,
and
right.
then calculating that down after.
Right. And so,
Yeah.
it's really 65% for any business that's a million or above in real revenue. So, after your businesses should all fall in this 65% number.
Yeah. Yeah. So 65% should be operating expenses. Where else are people putting their money when they're putting them into these buckets?
Well, one of the things that I like is when a business is at the size level of the businesses in your audience, I like for them to get real specific about things like pull out an account for advertising because I guarantee you a big chunk of their dollars are going towards ads. So let's put
Yeah.
that into an account. Let's set an ad budget. Let's see how we do against that budget. So part of that 65% would go towards your ads. And
Good.
there's numbers all over the place for that. What I see in looking at businesses that I have access to, I see a real connection between advertising spend and OpEx I don't see a really strong connection with advertising spend and revenue. And that's concerning to me because I feel like people aren't managing their ads very well. They're not getting the return
Say
that they should.
say that one more time, Cindy, because I
Okay.
think that's a very interesting point here. And especially as somebody who, runs, I own multiple e-com stores and an agency. What you said is very interesting.
I see a correlation between how much you spend and how much net profit or OPEX you're spending.
Yeah.
I don't see a correlation between how much ad spend you have and the revenue that you bring in. So, so what tells me is why are people
What does that tell all of us right now? Because you don't see that correlation.
yeah,
Like, should be 100% correlative if attribution is correct, right?
correct?
Which is why, everyone, I am so against pure attribution because of this issue right here, right? Attribution is not incrementality. What Cindy is talking about is that she does not see a link between ad spend and incremental revenue increases, right? Like, that's essentially what she's getting at, which is kind of mind boggling.
Yeah, kind of sad, you know,
Yeah.
because I mean, I know as an agency owner, you're wanting to produce for your clients value and you're wanting them to spend money so that they make more money. And
Yeah.
so that's what we want our clients to see too. Advertising can be great, but if you're not managing it well, it's just a cost. And so you've
Yeah.
got to be sure you're managing it.
Yeah. Yeah. Absolutely. Cindy, what else can you tell me? What else? What are some pitfalls that people need to look out for when they're potentially moving over to a system like this? Is there also pitfalls is one question. The next question also just to kind of tie in there as well. Is there a revenue point where it just doesn't make sense to run profit first anymore?
No, I've had clients over 33 million that were running profit first and swore by it. It's a mindset.
Why does my accountant hate it so much? Is really the question.
I I think accountants think that it's more work for them to understand there's multiple accounts, that there's more that they have to take care of. But what I find with my clients is when you have multiple accounts, you have smaller activity levels in those accounts and they're segregated for a specific thing. So if, for example, I have an advertising account, the 3 or 4 hits to Google ads or Facebook ads or whatever that happens every day is in one account, and I can go through and do that reconciliation fairly easily because it's not mixed with
Yeah.
the dollar at Starbucks and whatever else. When everything's all in one big account, that's much harder to reconcile. I know that I need to look at this, and for the most part they're right. If I'm wrong, it's usually timing at the beginning or the end of the month where something got in the bank account but didn't get in the statement. And I go click those last 3 things and we're all good. So I think there's this illusion that all these accounts make it harder to keep up with. When in practice, from an accounting perspective, we encourage our clients to set up accounts with a percentage budget because it helps them know, okay, if my ad spend is going to be 20%, when I start to see my bank account dwindling, I know that 20% is not buying something efficiently because I'm putting the 20% in there, but I'm running out of cash. So am I getting the return on my media spend that I have been used to getting? If not, why? Same thing with shipping. You have a separate account for shipping. Then you can start to see it was real obvious. I had a client when we ran into prices of diesel and everything just started skyrocketing and all the shipping companies started putting fuel surcharges on shipping costs. It was very obvious to my clients that, okay, I'm running out of shipping money before I have in the past. I've got to up my percentage because this is what's going on in the industry. So it
Totally.
gives you that snapshot just by looking at your bank accounts where you're at and whether you've got an issue or not. You just don't get that visibility through one bank account. And by the time you get it from your reports that your CPA sends you, you're already in a world of hurt.
Oh, you're done. You're done. You're
Right.
done at that point, right? Like you
Yeah.
need. Oh, of course.
Yeah.
Yeah.
So,
Absolutely.
so looking at your bank accounts, if they're structured properly, you got a dashboard right there.
Yeah. Yeah, absolutely.
That
I mean,
great.
that was one of my favorite parts about running Profit First because we ran it for years and all of our companies loved it. And then we got to this certain point where we just stopped it. And whether that's a good or a bad thing, that's just kind of what happened. I look at Profit First very fondly, and I loved being able to go in and look and be like, oh yeah, we're doing well right now. Whereas like when if you're not constantly, and we have dashboards for all of our companies that we're always looking at to make sure that everything's on track. But like if you're not looking at that stuff, the bank account is the easiest P&L to read, right?
Yeah,
Like, or the
exactly.
easiest balance sheet to read.
Yeah,
Awesome. This is what's going on right now.
yeah, yeah. And if you set it up properly, it gives you a ton of data.
Yeah. Yeah, absolutely. Cindy, I'm going to ask you the question I ask everyone who comes on the podcast. What is your secret to scaling?
Profit first.
Yes.
I met Mike McAllowitz in 2014, read the first book on the plane ride home after hearing him speak, implemented it in my business where I had lost $40,000 that year. And the next year I was profitable by about $80,000. And now, we're a multi-million dollar bookkeeping firm. And I
Wow.
did it all
Wow.
profit first.
Yeah. Yeah, absolutely. Yeah, guys, I mean, if you're struggling to wrap your head around your finances in your company, I highly recommend Profit First as a model when it comes to some of this stuff. Like there is a certain point where it just makes so much sense. People really feel like they get their lives back, right?
Mhm.
Like when you start running, it's budgeting, right? And it's really interesting. Cindy, thank you so much for coming and sharing. I got three more questions. I hope that you're ready.
Yeah, I'm ready.
Okay. First question, favorite tool or that you're using right now?
A2X.
Oh, what is this?
A2X is an integration tool that pulls the data from Shopify or Amazon and creates the journal entries and an accrual methodology to go into your QuickBooks or Xero accounts.
Oh, gotcha. Okay. Awesome. Awesome. That's great. Guys, we'll make sure to put a note in the show notes, the link for that in the show notes. Sorry. Lots of interviews today, everyone. I'm not at the top of my game, but we'll make sure that that goes down into the show notes so you guys can check that out if that's a connector that would work for you. Second question for you, favorite podcast or audiobook are you listening to?
Oh, audiobook. I'm currently listening to Buoyant by a lady named Susie DeVille. And it's all about innovation and creativity and been following her practices for several months now and really getting a lot out of it.
Cool. Awesome.
Mhm.
Awesome. That's great. Again, down in the show notes, guys. Cindy, last question for you. You just found out you have a year to live. What changes?
I would pull the trigger on things quicker. I spend too much time trying to get them right. I would just put them out there and get them going.
Mhm. Yeah.
Too
Yeah.
many ideas
Love
in
that.
my head waiting for their time. I just need to get them out there.
Yeah. Yeah. Humans are incredible. The more I get older and think about like all of these incredible things we get to create, right? It's really amazing. Cindy, thank you so much for your time today. Thanks for, reigniting a bit of my profit first, the love in my life here. So, yeah, I just really appreciate having this other perspective on things, guys. Remember, there's no one right way to do something, right? This may not work for everybody, but I'll tell you, it has worked for a lot of people that I know, especially as they're starting to grow their businesses. Cindy, where can people connect with you and find out more about how you can help with this? Because I actually never had a profit first certified bookkeeper in my life. So you are going to be the person that I'm going to send everyone who's doing profit first to.
Oh, well, thank you. The company's name is Bookskeep, BOOKSKEEP.com. And my email is Cindy, CYNDI at Bookskeep. So reach out to me or go to the website, check us out, and lots of DIY stuff there. So if you're just feeling like you want to investigate and play around with it, there's lots of all the tools and stuff that we use are actually there. So if you can do it yourself, go ahead. If you need help, we're here to help you.
Awesome. Awesome. That is absolutely great. And guys, remember, we will have all of that down in the show notes. Cindy, thank you again so much for your time today.
Thank you, Jordan. Really enjoyed talking with you, and I hope I gave you something to think about.
Yes. Yes, you did.